This video is based on the technical analysis of Alphabet. Alphabet is the parent company of Google, as you guys know. And at this point, we are on the monthly chart. And before we actually get into the actual technical analysis, just want to remind you guys that we are at this point in earnings season. And to those of you who aren't exactly sure as to what earnings season is, essentially what it is a about 2 month period where companies that are listed on the various stock markets release their financial earnings, right? So these earnings will have an effect on how these companies perform. So we just need to make sure that we exercise good money management and that we're ready for the volatility that's oncoming, right? And so, guys, without wasting any further time, let's get straight into the actual technical analysis. And as I said, we are on the monthly chart, and on the monthly chart, we can clearly see that price is at a very strong level of resistance. And the reason why price at this point has given us a reversal of sorts is because we had a double top over here. And as I say, guys, whenever we have these double tops, ideally we want to see price breaking sufficiently below the neckline and then come back to the neckline later. And at the neckline is where we would look for those potential sell opportunities. And that's what exactly happened in regards to this M structure over here, or double top, where price at this point closed sufficiently below the neckline and then went back up to the neckline to give it a test. And at this point, we seem to be getting a reversal of sorts. So it is also quite possible that we may see the market from this level actually move further down to around this level. Why do I say this level? That is because, similar to this double top over here, the market had also given us a very nice double bottom or W structure over there, and similarly it also has a neckline at that point, right? And just like with double tops or double M's or other M structures, with W formations we want to see price again closing sufficiently above the neckline, and then in future come back to the neckline to test it. And at this point where the neckline is generally where we look for those potential buy or sell opportunities, especially if the neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool. So as I said, it is quite possible that at this point we may see price move further down to around this level, and if it does so, at this level is where we would look for those potential buy opportunities. However, having said that, just bear in mind that we also have this level over here, more or less, which is a very strong level of support, as we had some rejections in and around that area, as you guys can see, and we may get another rejection at this point where the market actually moves further up, right? And because we have, remember here, we have that double top, and what happens a lot of the time in regards to double tops is that a lot of traders and investors sell on the second leg of that formation, and they place their stop losses just above. So there is quite a lot of money stuck there, and it is quite possible that, as I said, the market may move to this level to test this very strong level of support and then only move further up to grab all of those stop losses, because those stop losses are liquidity, and as I always say, liquidity is money that needs to be triggered by the market, right? But anyway, guys, for now let's focus on this area over here where the market given us this W structure with a neckline at that point. Remember I said that we may potentially see the market move further down to around this level, and at that level is where I believe, if it does happen, we should look for potential buy opportunities. However, just bear in mind that just like with M structures or double tops, with W formations as well, what happens is a lot of traders and investors buy on the second leg and they place their stop losses just below. So as much as I'm saying that the market may come to this level, and at this level we should look for potential buy opportunities, it is also quite possible that we may see price actually move that down to around this level, and from this level we may then see the market move further up, in which case the market would then give us what is a huge W structure. I hope you guys can see that. Anyway, from here let's head down to the weekly chart and see what's happening down there. And here we are on the weekly chart. Just bear with me, let's have a look, right? So at this point in time, the question becomes, is now a good idea to be buying Alphabet? And in my very humble opinion, I would say no, due to those reasons that I gave you on the monthly chart. To add to this, guys, remember, just to recap, we spoke about how the market had given us this M structure with a neckline at that point, and we said we want to see price closing sufficiently below the neckline and then coming back to the neckline to give it a test, and that's what happened. So another confirmation that we may potentially see price move further down is that The market has also given us a double top over here, which similarly has a neckline at that point. So should this current weekly candle close below the neckline, chances are we're going to see price head down to around this level over here that I spoke about, that I said is a very strong level of support, right? And perhaps to this level as well.